Well, guys and ladies, it looks like we've just been rejected again off of the $70,000 range. So I guess it's over, and I'm retiring and moving to the beach. I'll see you guys later. I'm just kidding, I'm not going anywhere, but it does look like we're seeing a tidal wave of liquidations right now. At the time of recording, Bitcoin is down around $66,500. A lot of people are speculating that this could be the beginning of a more significant dump, but I'm still holding out hope that we're going to be bouncing off of this parabola line right here, which is also perfectly coinciding with this 50-day moving average. At the time of recording, it does look like we have found a little bit of support here, but it could be broken down below that by the time you see this video even. Tomorrow we do have the Fed meeting though, so hopefully this is just going to be a pre-Fed dump, and then he's going to come out and say something dovish that's going to send us pumping again. With us having a 99.4% chance of a continuation of the pause, obviously if we did see a cut tomorrow, that would definitely send us exploding to the upside, but I'm definitely not expecting that to happen. At the time of recording though, it looks like we do have about a 50-50 chance that it's going to be the first rate cut in September, and if the Fed does come out and say anything a little bit more dovish and this changes in favor of the rate cut happening, then this could definitely be the boon we're looking for, and today's sell-off could just turn out to be a little bit of manipulation by people who know. Tomorrow we also have the CPI coming out, with the expectation of the year-over-year being 3.4% and the previous being 3.4%. The month-over-month is expected to come in at 0.1%, with the previous being 0.3%, and this means that we're basically teetering on the brink of them hopefully announcing that we are actually in a recession. And if this does come in lower than expected, then it is going to be headed towards a negative GDP. And with unemployment continuing to be on the rise and people being laid off, we could start to see the data points piling up to where the Fed is actually going to have to reverse course sooner than people expect, especially if we start to see some kind of banking crisis. And I have covered how more than 282 banks are actually at risk of failure right now, since the Fed's bank term lending program ended in March. So I do still expect that a crisis is coming up pretty quickly, and it's just a matter of time until the Fed has to do something drastic. Another reason why we could be having this sell-off today is because there's been a little bit of FUD that just recently entered the market. A pretty concerning crypto bill just quietly snuck by and was passed in a larger bill. And as it says here on this article by Forbes, the passage, spotted by eagle-eye reporters at CoinDesk, would reportedly speed and automate this process to sanction foreign digital asset transaction facilitators, including crypto exchanges, that are linked to users who support T groups. The Intelligence Authorization Act, or IAA, cleared a committee in a unanimous 17-0 vote. However, the crypto industry insiders polled by CoinDesk say the provision is unlikely to survive the budget process. I think it likely does get zapped out of the NDAA, National Defense Authorization Act, process, given the immediate pushback from the industry, Cody Carbone, chief police officer for the Digital Chamber, told CoinDesk. And so as we know, they continue to pass these huge bills with a bunch of paperwork that nobody can actually read. And so things like this are bound to sneak through, but whenever people bring it to the spotlight, then hopefully the pushback is going to be significant enough that they can't actually implement these things. Luckily, it looks like there already is a little bit of pushback, and I really don't think that this is going to be something significant enough to push us down any further. This article by Barron's has another thesis on why we're not going up, and this one actually seems more significant to me. It says the Bitcoin spot ETFs continue to see strong inflows, recording net inflows on every trading day last week, and this marked the fourth consecutive week of net inflows, wrote Matteo Greco, an analyst at Phoenicia International. However, those inflows don't appear to be enough to boost the price. Traders look to be buying spot ETFs while at the same time selling futures linked to the cryptocurrency, aiming to profit from the futures market premium, according to BitMEX research. The selling pressures created by the futures trade therefore keeps the price in equilibrium. Right now, it really just seems like the market is just so boring that people are doing anything they can to try to make a little bit of profit. But really, we're just waiting for a big-time catalyst that's going to give us another leg higher, because we've basically been moving off of the momentum of the ETFs up until this point, but there hasn't been any real big announcements of big companies starting to accept cryptocurrencies or any like ads or anything big and exciting like we saw in the last bull market, really. There's only so far that we can go off of the hype from these ETFs, and I just think that it's going to take something a little bit more exciting to bring retail investors back into the market. Luckily, it looks like the world is kind of starting to pick up on the narrative that Bitcoiners and crypto bros have been pushing for years now. And according to this article on Watcher Guru, it looks like the world's largest bank has now called Bitcoin gold and Ethereum digital oil. This is pretty much what people in the crypto space have been saying for years now. But now, with the biggest institutions and banks in the world and also governments starting to jump on the bandwagon, mass adoption is right around the corner, but it is still going to take some time for people to actually adopt the technology. For now, though, I'm still hoping that we're going to be bouncing off of this 50-day moving average and this parabolic trend line that we've been interacting with for more than a year now. But if we don't actually bounce here, then I'm still looking at this production cost as the worst case scenario, and that means that we could have a dip down to around $64,000 or so. But that'll probably be a really great buying opportunity because we still haven't reached the parabolic phase of this thing yet. And whenever we finally can break above and confirm a continuation above this production cost, I think that's whenever the parabolic price action is going to kick in. And as I continue to say, I still think we're in play for that $100,000 price target, which will hopefully be happening by the end of the year. So let me know what you guys think in the comments. Are we going to be bouncing off of that 50-day moving average? And is the Fed going to be the catalyst that sends us upward? Or is this just the beginning of a more significant sell-off? Either way, thank you guys so much for watching, and don't forget to hit that like and subscribe button if I brought you value. But most importantly, don't forget to do only good every day, and I'll see you guys next time. Bye.